Alrighty, let's talk about Tesla. As a shareholder of this company many times, I've been through a lot in regards to Tesla. And this is probably I'll say this. This is the least bullish I've been on Tesla throughout my investing history in regards to Tesla, right? Now, it really has nothing to do with the stock. It has everything to do with this man, right? And what Elon Musk, I'll put it to you like this. For the past 3 years, Elon Musk has put an incredible amount of time and attention into two areas. Twitter, which is now known as X, right? By the way, if you don't follow me on X, you can do so. I have that linked in the description area down there of this video. I post a lot of stuff on X all the time. And the other thing he's put a ton of time into is politics, right? Or political related subjects. They get into Republicans versus Democrats and all this stuff, okay? Alrighty. Imagine just for a moment if Elon Musk had put all that time and attention that he has put into Twitter and put into politics into Tesla. There's absolutely, positively no doubt in my mind that Tesla would be tremendously ahead of where they are right now. And it's not even close. I have the belief that Tesla would probably be selling 3 to 5 million cars a year. But Elon Musk has been out of office for 3 years now at this point in time. I would really say he's kind of been out of office since 2021 going into 2022. And he's doing bare minimum required at Tesla because he spent so much time on X and Twitter over the last few years and so much time in regards to politics and everything that's going on there. So we basically have a CEO that has been out of office for 3 years now. And it's really showing, right? And then obviously you take it a step further and how much damage he has created for Tesla's brand is really unparalleled, right? The brand he built there really from, let's call it the brand he built at Tesla, really from 2011 to 2021 was legendary. And what he has done to that brand from 2022 to 2025 has been absolutely devastating. Absolutely devastating. So frustrating, right? It doesn't mean it's not salvageable in regards to Tesla. And here's why. Tesla's technology, the vehicles are unbelievable. Unbelievable. So as somebody that has driven Teslas for many years and has driven the best of the best vehicles in the world, Mercedes, BMW, Ferrari, everything you want to drive, right? I come back again and again, Tesla makes unbelievable vehicles and they make your life so convenient. Everything just is so seamless that you never want to not have a Tesla once you have a Tesla. But with that being said, the brand is in an awful place. It's in an awful place in the United States. It's in even a worse place in Europe. And I don't think it's in nearly as good of a place as it was in China. And so therefore, those are the three main markets for Tesla. That makes it brutally tough. Now, additionally, we really have nothing super exciting going on right now in regards to the company. We got the Model 3, Model Y, Model S, Model X, right? Cybertruck, the brand's been hurt so much that product is not nearly as cool as it once was because the brand's been hurt so much. And you got to understand, when you hurt the brand so much like that, it affects negatively all the sales of all the vehicles. So the moral of the story is Elon needs out. Tesla, and this is the first time this is the first time I really felt like this recently. Tesla would be better off without Elon Musk than with Elon Musk. And that could not be said in past years. In past years, like if we go back 5 years ago, 10 years ago, no way would I ever say that. I say, oh, we need Elon Musk at the helm. He's so important. He's so vital to the company. Absolutely. Like Elon. We need Elon gone, out of the company. Tesla would be better off if Elon completely removed himself from the company now at this point in time. And so the question is, who would I put in Elon's place? I would put Dara in his place. Dara is the CEO of Uber. He's done a very good job running Uber. Now, I think Dara would consider leaving Uber to come over to Tesla. I really do. And the reason being is Tesla there's so much raw potential there with Tesla. The engineering teams are amazing at Tesla that I really think Dara would strongly consider if Elon said, you know what, I'm out. I need somebody to run this show for the next 10, 15 years. I really think Dara would consider it because I think it would just be a tremendous opportunity. And the thing with Dara is it's not just like if you look at where Uber's revenues were and where its profitability was when Dara took over versus where it is nowadays, it's a night and day difference. So he's done a tremendous job in regards to the financials. But it's not just that. When Dara joined Uber, Uber was in a bad place with their brand. They had just previously had a video go viral all over the internet where Travis might have been drinking, I don't know, okay? But he was in an Uber car and the driver confronted him and it was an ugly situation and made Travis look like an absolute jerk to the world, okay? It did not paint him in a good light. And that was just one of many reasons Travis had to basically take off from the company. Also, the company culture was supposedly super toxic in regards to what was going on with Uber. So Uber had a lot of brand problems, internal, external, everything going on there. And Dara came in and revitalized that brand over the next few years. And Uber, you don't think of anything like that now. You just think of, I'm going to go get a ride from Uber, or I'm going to go, order something on Uber Eats or whatever, right? And he's also built out a very successful subscription business model now, Uber One, in regards to Uber as well, right? Where people will pay, for Uber Eats subscription or Uber Ride subscription. So he's done a tremendous job. And I think he would do a great job with Tesla getting the company back on the right track. I think he would really do it. Because the thing with Tesla, we have so many great engineers at that company. We don't necessarily need a super innovator at the company anymore. We just need a guy that's going to operate, say, hey, we need to come out with this product, this service, we need to do this, get the company all aligned, moving in one direction, and execute. And we just don't have that for the last several years in regards to Tesla, and it shows in the numbers. There's no reason Tesla numbers should be as bad as they are. But they are as bad as they are because of one man, and his name's Elon Musk. Like I said, if Elon was really dedicated to Tesla and putting in all his time, there's no doubt in my mind we'd be selling 3 to 5 million cars a year right now. But we're not. And so, Elon Musk has gotta, it would be in his best interest and everybody's best interest if he took off from Tesla. And then we could talk about, a stock that would be in a much better place. Now, assuming Elon Musk is not going to leave Tesla and he's going to stay around, where does Tesla bottom? Your guess is as good as mine. Could Tesla round trip the whole move over the past few years and head all the way back down to a low $100 level? I don't see why not. What is the super encouraging thing to invest in Tesla right now? I don't see one reason. The brand's in a horrible place, right? That's not going to magically fix itself in the short term, especially with Elon Musk still attached to the brand. Self-driving vehicles, in that being any sort of material business, is years and years away. That's a long time away. What do we have to go off of? The energy business, the growth rates are going to start coming down substantially over this next couple of years. What do we have to be excited about anytime soon? And you got to understand, Tesla stock moves on excitement, and there's nothing exciting going on. The most exciting thing that could possibly go on for Tesla would be Elon Musk stepping down from the company.
How would you like access to all my best course curriculums? My Becoming Master of the Stock Market course, my Stock Market Investing Mastery course, my Stock Options Mastery course, my Millionaire Playbook. How would you like access to all my best courses, as well as the ability to have access to my 6 and 7 figure plus Discord community, where we're constantly keeping in touch with each other, talking about what's going on in the market? How would you like exclusive weekly videos from me? How would you like the ability to see what stocks I'm buying and selling in my $2 million plus Fidelity account? If that all sounds pretty interesting to you, apply to join my private group. That is going to be linked in the description area down there. You can click on that, fill out an application, and go ahead, hop on a call with Andre. Andre will walk you through the whole process. He'll walk you through the whole group, and you can go ahead and join us in there. Once again, the link for that is in the description area.
Alrighty, let's go ahead and now let's react to this video.
market is brewing towards?
Well, I just think it's a continuation of this recalibration story that 2025 is all about. I described it yesterday to you as the year of the bond, the first time that you're looking at unloved areas of the market over the last several years when you think about investing. But that comes with pain. That has to come with pain, because over the last several years, you had a dramatic beta chase. And within that beta chase, it was all about the Magnificent Seven and the outperformance. Now you see a very active unwind of that. And I don't believe that investors or viewers should expect that abates anytime soon, and you get that V-shaped recovery that historically we've had over the last several years.
Bill, the beta chase is one thing. The alpha chase also happens in both up markets and down markets. I don't pretend to know that this is the beginning of a broader down market, but we are now off about 13% from record highs in that NASDAQ composite index, to Joe's point about what's been kind of driving the market action. If that is the case, how do you view the outperformance if there was hypothetically going to be more downside risk in the market overall?
Yeah, it's a great question, but I'm not as negative as Joe right now. I think we're in the later innings of what we could be seeing here, and I think to contextualize things, you really have to take a look at how we got here. You look at after Trump won the election, there was the Trump bump. All this in most markets all ran, and the dollar rallied. And what we've really seen is a big unwind of the dollar this year. So where has the puck gone? You've seen Europe, you've seen Asia, a lot of outperformance there. And I didn't think that we would see continued tailwinds there, but right now, if the dollar is going to continue lower, and I am a bear on the dollar, I think you're going to see outperformance within those. But I do think we're in the later innings of some of this movement with tech. I mean, the money has been brought home. The money's been brought to Europe. It's ex-U.S. investors that have taken that money out and brought it to Europe, brought it to Asia. So that's why we're seeing that outperformance there. The euro on the month is over the last month, it's up 8%. That's a huge move in currencies. So I think you want to be looking at ex-US, but I wouldn't be chasing anything here. I think a lot of this move has happened.
I think a lot of that currency move is also driving the outperformance that we've seen in European equities writ large versus the US market so far. Josh, as you take a look at the way wealth managers are here, meeting with people and converging around different ideas, there has to be a feel right now of caution, at least among some of their clients. What are the conversations that you're having right now about whether or not this is the beginning of something possibly deeper?
I think you can kind of separate the wealth management community into two buckets. Bucket one has been riding the Mag 7, has been willing to play along with this overweight U.S. growth theme, has been looking for separate account managers and fund managers who were willing to chase what had been seemingly a layup trade. Those are the people that are not having that much fun right now. The other bucket, which I think is the overwhelming majority of wealth managers, financial advisors in America and also at this event, these are the people who have been apologizing for European exposure for 3 years. They're not apologizing this year. These are the people who have been chastised, gently chastised by clients. Hey, why don't I own this stock? Why don't I own that stock? Those conversations have ceased. Right now, you've got utilities and healthcare leading. You've got the median stock in a 20% drawdown in the S&P 500. I know we're not officially down in a bear market, negative 20 on the S&P. I'm willing to call it a bear market. I think for most stocks, we're already there. And just it's classic the way that defensives are outperforming. This is exactly what bear markets look and feel like. So I think we're pretty much in one. Doesn't mean that we can't pull out of it, because a lot of the wounds are self-inflicted. But for right now, this is exactly what it looks like, what it feels like. I want to share two things that I think are really important. The B of A Global Fund Manager Survey just saw its largest drop in U.S. equity allocation ever, not just this year, not just this era. University of Michigan Gauge is now hitting expected unemployment numbers at the highest.
Bottom line, second biggest drop in global growth expectations ever, biggest drop in U.S. equity allocation ever, biggest jump in cash allocation since March 2020. And that's why I say this is one of the funniest, this is one of the most funny, entertaining drops I've seen in the market in recent times because of how dramatic it is. I mean, when we're talking about biggest drop ever in this, biggest drop ever in this, worst AAI investor sentiment numbers since the great financial crisis, You know, we talk about biggest jump in cash allocation since March of 2020 when Rona was going on. People thought the economy was going to be closed. And it's like people are getting this freaked out over tariffs, Doge. Like, come on, man. Like, it's just like this very entertaining drop.
Readings since the great financial crisis 15 years ago. So I'm saying it's more than a correction. I'm saying it's a bear market. And I think the crowd here is happy to have other assets that are working right now.
Okay, so I'm gonna say this right now. I was on stage this morning with Gabriela Santos at JP Morgan Asset Management,
Santos.
with Emily Rowland at John Hancock, with Brian Belsky, right, from BMO Capital Markets.
They were all bearish.
Okay, I'm just telling you right now, the conversation was cautious, but not nearly as bearish as you are making it out right now, because they think the economy is still constructive, Joe.
I'm
Right,
bullish.
no, but what's the chance? Think about this. What's the chance that potentially what we're actually seeing is that large cap growth goes into a bear market, mid and large cap value enter a bull market? That potentially might occur. And I think that's something that you have to think about right now.
All right, so that conversation is there. Let's talk also about what's happening with the driver of this right now. One of those key catalysts, NVIDIA's annual GTC event is underway with CEO Jensen Huang, the poster child of artificial intelligence, set to speak just in the next hour. So let's break it all down with Wedbush's global head of technology research. You know him, colorful as ever, Dan Ives. He has an outperform rating and a $175.
See, Dan Ives, he looks like a man that could always fit into the Miami vibes. They got this Miami situation going on, and this man, he dresses every day like he's in Miami. It's incredible.
Price on those NVIDIA shares. Notable bull, especially in technology. Bullish as your outfit right now. So let's talk about whether or not Jensen can deliver the goods at GTC this afternoon.
I think it's going to be a watershed event. I mean, I think when you hear from the godfather of AI, Jensen, he's going to lay out what demand looks like for Blackwell. And ultimately, I mean, right now, we believe 15-to-1 demand to supply, you know, in terms of what we see for Blackwell. It's about not just things like in terms of Ruby and others, physical AI, autonomous robotics. And I hear everything that Josh is saying, but in my opinion, we are in year 3 of an 8 to 10 year build out for the AI revolution. And that's why it's so front and center what we're going to hear from the godfather of AI, Jensen, you know, in San Jose.
All right, so NVIDIA shares have now pulled back notably, not as much as other mega cap technology stocks have, but a lot of it was driven by kind of the recent quarterly reports that have come out. The fundamentals are very much intact. Nobody's going to dispute that. But the question is relative to expectations, and that's where NVIDIA ran into some problems with its most recent numbers. They're still growing, and by a rapid clip. But why are analysts then so much more bullish where they cannot meet exactly or exceed a lot the expectations that are out there?
I think it's a digestion period. I mean, I think we go through the next 4 quarters, you're going to ultimately see, I think street numbers are going to come up 15, 20% over the next few years. I think buy side definitely is very negative here, but as this all plays out, I think it's a stock that has a 2 in front of it. Because the AI revolution, remember, despite DeepSeek in terms of everything we saw there, with some of the Cinderella story in terms of some of the fears in terms of NVIDIA on the chip side, there's one chip in the world fueling this, it's NVIDIA.
This is the cheapest you have been able to buy NVIDIA stock since October of 2022, before the launch of ChatGPT, which set off the AI era. So NVIDIA in the AI era, as the leading player in AI, has never been a better bargain than it is today. The stock is, the company has 52% growth expectations for this year. It's now a 20 forward PE. How insane is this market right now where they would rather buy Walmart at 30 some odd times earnings than this at 20? Walmart, if they're lucky, might be growing high single digits this year.
I'd say.
So phenomenal point. And so I brought up, one of our tools on 1000X we have is the comparison tool where you can compare 3 companies versus each other. And this really illustrates it here, right? I have NVIDIA pulled up next to Walmart, next to Costco. You're looking at NVIDIA's forward P. It's in the 20s. We can call it 23-ish, somewhere around there, right? And those are based upon analyst expectations. So, let's call it somewhere between 20 and 25. It's probably about right. Walmart's over 25, and then Costco's at 47, right? And you just think about, who's got a lot more growth prospect. If you told me gun to my head, I got to buy one of those. I got to put $100,000 in one of those stocks. And I have to hold it there for the next 10 years. I'm going to go Nvidia. If you told me I got to try to pick the one that performs the best for the next, I don't know, month, I don't know, maybe I'll think differently, right? Maybe I'll think Walmart or Costco. But at the end of the day, like, dude, there's no question I would much rather buy Nvidia today than I'd buy Walmart or Costco. Even though it could be a much more volatile stock in the short term, I don't care. Like, if you told me it's out of those three, like, and it would be totally different if Nvidia was trading at an 80 forward P right now or 100 forward P, right? Because I was saying, well, they priced in a lot. Yeah, the growth rates are really good, but, you know, if they start to slow down. At the end of the day, at a 20-something forward P versus Walmart and Costco, come on, man. Come on. Now, you might say, okay, why AMD over Nvidia? That's because I believe AMD over the next several years is going to have a growth rate much faster than Nvidia. And so therefore, I believe AMD is a better arbitrage opportunity for, let's say, the next 5 years, if not the next 10 years, than Nvidia. Doesn't mean Nvidia is going to do bad. It's just, if I have to pick Nvidia versus AMD, I'm going AMD. But then if I'm going Nvidia versus Walmart or Costco, I'm going Nvidia. No question about it, right? And I'd pick Nvidia over a lot of stocks, honestly, in this market. You know, there might be 20 or 30 stocks I like better than Nvidia out of the thousands of stocks in the stock market. But Nvidia is in that next group that is like, you know, I think it's a moneymaker over the coming years. It's just, you know, like I said, AMD is a better buy in my personal opinion. We'll see how that shakes out over the next few years.
In 25 years doing this, I can count the times that have been almost the generational opportunities relative to what the stock's doing. That's where I think Nvidia is here.
I think this is a generational
I think because my view is we're going to be talking about Nvidia 4 trillion, 5 trillion over the coming years, despite near term, you know, in terms of political export controls, everything else. That's where this is going. We're talking about 2 trillion of AI capex next 3 years. There's only one red phone that you could call to get those chips. It's
you want to
Nvidia.
laugh? You know what he should announce at GTC? How about a buyback? I think that would probably do more good than any technology.
Okay.
I mean, it's really.
That's fair, honestly. Like, if they did if Jensen did announce like a really crazy buyback, I wouldn't be surprised if that did actually boost the stock substantially. And honestly, Nvidia should be buying back as many shares as possible right now. Like, they really should. If you look at Nvidia's everything right now, right, and specifically their cash flows coming in, it's insane. Look at their trailing 12-month revenues, by the way. Oh my gosh. And this is what's projected to happen. They're supposed to go to 200 billion plus in revenues, right? But you look at their earnings per share and what's expected to happen over this next number of quarters, right? Look at their free cash flow recently, right? Free cash flow, we're now talking about $60 billion plus. Man, they should be plowing as much money as they possibly can into share buybacks. I will say that. This is one of those companies they should be doing that. Obviously, they're already spending immensely on R&D. They're going to continue to do that. But there's no question, given where NVIDIA's valuation is right now, where the PE ratios are, and given where the market's at right now, and given where the company's cash flows that are going to be incoming over this next few years, yeah, buy as many shares as you can get your hands on right now. If I was NVIDIA, like, that's what I'd be doing with my money. I think it's a much better play than buying out, because I think NVIDIA is already good for the next 5-10 years on the technology front. I think they got the whole system in place. And so I don't really think NVIDIA needs to do any acquisitions. And plus, even if NVIDIA did any major acquisitions, I think it would have trouble getting through the government because they're such a big tech company. They're seen as so powerful now. I think it'd be hard for them to do anything. I don't think that makes sense. And then you can say, well, they could pay out dividends. You're going to get much better shareholder returns by them buying back shares right now, in my personal opinion, than dividends. Once again, if this was a stock trading at an 80 forward P, I'd feel very differently about it. But at a 20-something forward P, they should be buying back shares here, as many shares as they can get their hands on. And what else could they do? They could save up money for a rainy day. Even with big buybacks, they're still going to be able to save up plenty of money for a rainy day and still be able to generate plenty of interest income. So that's going to continue to pour in. So yeah, they should be doing share buybacks. All right, guys, appreciate you joining me as always. Thank you so much for being here. If you're looking to apply, join my private stock group, private wealth group, and learn how to scale up your wealth, you can go ahead, click the pinned comment down there. fill out a form. We'll see if we can get you access to all that maybe in the next week or two, right? You get access to my entire library of premium courses, access to my private Discord chat, see the stocks I'm buying and selling, my portfolios, all that good stuff. Much love and have a great day.